Hey, Philip. So, in regards to this email too, um, this is actually a on-demand one right here. I'm looking at Thursday's data. I can only go back to because the um, the platform already got rid of the weekly. Anyways, so this is from Thursday's data again, and this actually moved on Thursday. They closed a bunch of these up, so the volume was only down like 5,500 of the open interest. I mean, so you had and the 340 stayed the same. So 350s had the highest open interest, and then 340 by a lot. And then, so what do you know? They closed Apple at 340x. Going back to real time data. Here's the May monthly, and this has been on Apple's board for a while because it's part of their option cycle. Um, you can tell by the amount of open interest down here. So again, you have the 350s with the highest strike, and the 330. So it's going to be no lower than 330, no higher than 350. Um, Basically, you just think of this as insurance. Institutional money is writing these insurance contracts, and they don't want to pay them out. So they're going to protect their highest payout right here, and then right here. Uh, you can you can say, I mean, if it was a perfect world, but manipulating stuff, I'm not sure like the exact inner workings, but I mean, it has to cost a lot of money too, and you don't want to raise red flags or whatever. But with commissions and all the stuff with buying up, you don't want to put too much uh, risk on your books and stuff. So that's why you may never get an ultimate like 350 would be perfect because then you get all this stuff. So I think it costs a lot too, and that's why I've looked at this for years and years and years, and uh, I follow what they do. I sell insurance every single month. I sell the front month just like they do. I sell put spreads and I sell covered calls against my long. Um, I don't sell this close to the money, but regardless, I sell them once a month. So I made 12 trades last year, and all 12 came up winning using this data. So it's tried and true. It's the real deal. It's why Apple is being held down because of the weekly options or the options market in general. It's just exacerbated by these weeklies. Um, so one thing that people need to really understand is the pinning difference. Let's go to a calculator here. Sorry about that. I should have this pulled up. Um, so I use the like kind of an altered max pain. I don't use a specific strike because like even you stated in one of your articles, it's like 11.5% of the time it pins at this. And again, pinning is not max pain. There are two different things. Um, I go it's done by money, and I know this, and I fully understand that. But I use a an altered type of max pain where I'm using the open interest. Is it more reliable because it's a $20 spread? Probably, but the point is it's this number right here are the key numbers. So uh, do it doesn't really there is no magic pin number. There is no magic strike like it's going to be 340, no ifs ands or buts. If it doesn't hit 340, the theory, there is no theory. It's just it's all in your head. No, that's not the thing. It three 332, 335, 348, 345, 3 it's all the same. It's all the same payout. The thing is they just want to protect this and they want to protect this. Um, it is done by money, so to do your own like current pain type calculator is gonna be hey pain. Um, so that's why I just use this. I don't have the tools or the resource or the time to do a current pain by value myself. But it works every time, and this is the reason why Apple's being held down by options. There is no other explanation of why of why it is. I mean, the stock cannot be trading this cheap, and you can just tell by the way it does trade why it just takes these sudden, drops or whatever. It comes up 350, just suddenly gets beaten down, or like a rumor will come up to mask it or something. It's just this is why. This is the reasoning behind it, and it's hard for. It's not really. This subject is very simple. I mean, under this, above this. The thing is, what people need to wrap their head around and stuff is actually seeing it. So the more and more you watch this and see it, you're like, hey, this really isn't just some crazy conspiracy thing. I mean, there's a reason for it. And every so often you'll get an event or a news or something like that where it will just burst through this wall and there's nothing these option holders they just got to bite the bullet and take the pain or whatever where some unannounced product comes out or worldwide developers conference or something comes out where it'll break through this and then it'll go on its couple week or month run or whatever and it'll start over again at whatever the new price may be and then they'll start writing it against there and when it comes up to this wall they'll knock it down and that's how it's done. So because sometimes like say this week there was a worldwide developers conference or something and the stock was already 348, you can make argument of yeah they're not gonna just start dumping shares right at the open, make something look obvious like we're okay with this, we expired all these and all this, we'll take this little hit and we'll let it run up to 360, that's fine. So there are like kind of finer points like that where the theory's not it's not set in stone. There are times when it breaks through, but if you look back just on a chart like last year from May to September, whatever. I mean, just the stock is just flatline. I think the weeklies came out in like June or July though, but so if you look at that time frame, just Apple stock doesn't move. Like that's weird. Um, and so thanks to weeklies, and this is this is how it's done. It's keep up to date, but that's